Welcome to the Let's Get Entrepreneurial podcast, your go-to resource for navigating the world of entrepreneurship.
Welcome to today's episode, where we dive into the world of pitch decks, an indispensable tool for any startup looking to secure funding. A well-crafted pitch deck not only captivates potential investors, but is also crucial in illustrating your business vision, demonstrating your path to profitability, and ultimately unlocking the capital necessary to propel your venture forward.
If you're looking to ignite your entrepreneurial spirit and transform your ideas into action, we invite you to follow our podcast.
The Let's Get Entrepreneurial podcast is your ultimate launchpad for igniting ideas and skyrocketing your entrepreneurial dreams. Tune in, buckle up, and let's unleash the entrepreneurial spirit within. Your two hosts will be Professor Gary Palin and serial entrepreneur Ryan Budden.
Hello, Ryan. How are you doing today?
I'm doing very well. What about you, Professor Palin?
Very busy at this point. We just finished the spring semester, and today's the first day of summer sessions.
You're a glutton for punishment, going in for summer sessions when you don't even have to.
Oh, molding young minds every day. Today, Ryan, I wanted to speak about a concept. I think we've been remiss in not bringing it up earlier, was the concept of a pitch deck.
Yeah, it seems so obvious. We've been doing this for a long time, and that's kind of the point of the podcast, is to go back and think about things we just know about inherently and other people might not. It's a great topic for us to hit and a great topic for our listeners.
Anyone that's not familiar with it, a pitch deck is really a concise presentation. It's used by entrepreneurs to provide potential investors with an overview of the business plan, vision, and goals. So essentially, a pitch deck is designed to generate interest from investors.
Yeah, in a presentation form.
I thought we could start with just the essentials of a pitch deck from my perspective, and then we can have conversations based on those. I have 7 that I always like to see in a pitch deck. The first is the problem statement. I would like the presenter to clearly articulate the problem that the product aims to solve and explain why it matters and how it affects the market.
Before we get into the first one, it's worth mentioning that you have started, hosted, and attended maybe hundreds of pitch competitions where pitch decks have been a part of this before.
Yes, I have quite a bit of background on this, and I've led students to quite a bit of success in competitions. So I have quite a bit of experience in guiding young people to how do you present to investors.
And on top of that, you're an investor yourself. So you've seen these pitch decks in quite the other opposite light, not for an academia purpose, for a very real business purpose. So I just wanted to get that out there. You're quite a qualified person to be talking about this before we just jump into what's absolutely necessary to be there.
I've seen the good, the bad, and the ugly.
There we go. So back to point 1. Sorry to cut you off, but I think that's important for everybody listening.
No problem. The first one is problem statement. You have to clearly articulate the problem that your product aims to solve.
And that's huge, because that's the reason for being in business for most businesses, is there's an issue you're trying to solve.
If it's not something that's impactful or has a reason to exist, or there is a void in the market, you'll turn the investors off very, very quickly. It has to be something that's impactful, and you have to clearly articulate it. And I like to use data points to articulate.
You've used the word clearly articulate. That's critical for this whole presentation, because it needs to be clear, but as few words as possible, so that it's really easy to digest.
You keep the fluff out of it. And very often you have a short period of time to make the presentation. So you have to be clear and concise and hit the key points. One of the reasons for having a concise time frame is the investors want to see, can you identify the key points? If I gave you an hour, you could just keep throwing mud on the wall and you might hit the right things eventually.
That's exactly right.
The second area that I like to see in a pitch deck is the solution to the problem. Describe your solution in detail, how your product addresses the identified problem, and very importantly, why it's unique and or superior to existing solutions.
This is a really good distinction, because a lot of times companies will do this in their pitch decks. They'll tell you about their company, but they won't frame it in the way that they are the solution to the identified problem. That connection is really important for people to see, and it shows, even though people might know it, it shows it very clearly.
You've not only just identified the solution, but how your product or service is going to specifically address it. Absolutely critical. In any one of these that you drop the ball, the investors will close their minds and sometimes stop you.
I've definitely seen that in my work with angel groups, just stopping presentations if it's not of interest or there's clearly not going to be a fit. Another important distinction to make, because we're using the terms pitch deck, which we're talking about today, and presentation interchangeably. We're really specifically talking about with the pitch deck, the material that's being presented, and then you present on top of it. Not everything that you're going to say or want to express is going to be written in the pitch deck.
That's correct. As a matter of fact, you should not put everything in the pitch deck. The Guy Kawasaki's 10-20-30 rule, if anyone's not familiar with that, I would suggest they Google that and watch his video. It's a very short video, but in my mind, that nails it. You see people putting so much verbiage on a slide. It just turns the investors off. And also what happens is the investors start reading the slide and stop paying attention to what you're saying.
Right. The Guy Kawasaki 10-20-30 is absolutely crucial. And I know I've worked with multiple VC groups and angel groups that specifically require their presentations or pitch decks to be sent to them using that format. If you are doing this for the first time and looking at it, it seems very restrictive at first, but it will enhance the pitch deck that you're sending off.
And the pitch deck, as we were talking, sometimes you're not even there. Very often the investor will say, send your pitch deck to me, and they will review the pitch deck to see if they even want to speak with you. You can also then use the pitch deck if there is a presentation. But what's important to understand is the pitch deck is not the presentation. You are the presentation. That's a clear distinction. The pitch deck supports your presentation. Henceforth, when someone gets up and starts reading the presentation off the pitch deck, immediately that's a turn off to me.
It's there to support you, not take your place.
Exactly. The third area I like to see in the pitch deck is the market size. And this is very much data-driven on the marketing opportunity. Things that you want to explain are the size of the addressable market, are there growth trends or any other relevant market segments?
People want to be in markets that are big, growing, or sustainable. Showing those is going to be critical to getting interest.
That concept of addressable market, I know we've spoken about it in past concepts, that's different than the total market. Don't throw the total market just because it's a huge number. Who are you targeting specifically? Who are you addressing? And it very often is a subset of the totality of the market.
Right. I know we've probably given this example before, but it's a really big red flag. It warrants going over again. I don't know how many pitch decks or presentations I've seen where they've said China and their 2 billion people is the market. No, it's just not.
The fourth area that I like to see once we've identified the problem, solution, and the market is what is your business model? And really that's the outline of the revenue model. How do you plan on making money? Is it through subscriptions, licensing? What other means are you going to monetize this concept?
And that could be as simple as you have one service you're selling, and it could be as complicated as you have products, services, different products, selling in different products at different markets. It can get very complicated or very simple. So making sure that you can concisely communicate that is critical.
And I would recommend anyone that's seriously looking at putting a pitch deck together to look at our previous podcast about the business model canvas.
Without a doubt, still one of my favorite tools of all times.
What I would like to see after the business model is what traction have you made? Showcase any progress that you've made. Is there any user adoption? What sales figures do you have? Do you have any strategic alliances, partnerships? Are there successful pilot programs? Where have you brought this? A pitch deck to investors is not, I have an idea, fund me. They should have, or ideally will have developed it to a certain point where then they need the investors. But traction is something investors want to see. They're not just going to invest typically not going to invest in just the idea.
And ironically, right before this call, we were talking about how execution is key. This is your chance to show that you're an executor, not just an idea guy. What have you done, even if it doesn't mean a big sales number? What are the conversations you've had? What validation have you gotten? What have you actually put in place? What have you executed on?
Yeah, execution is, to me, the hardest component of entrepreneurship, yet the most important.
without a doubt. If you're not an executor, entrepreneurship is going to be a very difficult game for you.
I agree. Well, the next area that I'd like to see in a pitch deck is the team. You want to introduce team members, and specifically, what is their relevant experience, skills, and expertise? Why should the investor invest in them? Because typically investors invest in people, the team, versus the idea.
Most oftentimes they're investing in the team. I don't know how many businesses, successful businesses that are, if you looked at their original pitch deck, how different it is once it becomes successful, how many times they've had to pivot in the course of that business to get to the point of success. I'd be willing to bet that very, very little businesses, their first pitch deck is actually what the successful business model has turned into. For that reason, investors invest in the team because they know it's going to change. They know there has to be some adaptation to get to that next level where they see a good return on their money.
Obviously, the investor would like to see an A idea and an A team, but if they could pick only one, an A idea and a B team, or an A team and a B idea, all day long they will pick the A team and the B idea because the B team will screw up the A idea, where the A team will fix the B idea. And that's the concept of that.
Yeah, that's exactly right. And I've heard many people say that exact statement before. So it has to ring true if I've had multiple investors say the exact words.
Either that or I've been quoted very often.
Yeah, we'll go with that one.
And the last, and far from the least important, is the financials. What are the financial projections, revenue forecast, expense breakdowns, in any other financial metric that's pertinent to your particular project?
Finances are a huge thing. Most oftentimes, the finances get into the ask of what you need. That's why ultimately you've put one of these pitch decks together. How are you going to use it? How much do you need? And where will it be deployed?
Yeah, and one of the things that's very important when you're doing this is you don't necessarily have to have crunched the financials, but you better understand the financials. So when questions come out, you don't want to say, oh, my accountant did that for me.
Right. Yeah, you don't have to have been the one to do it, but you better understand it. A big one that I think people miss on those financials, people are pretty good at saying, look, we have this much money, we need this much money, but how long is that amount of money going to last? And it's typically referred to as runway. So if you're asking for some amount of money, is that going to last you 6 months? And you think that after the 6 months, you'll be able to continue without it? 12 months, 18 months, what is it?
So those are the major components of the pitch deck that I see. Within that, you want to follow with the ask. What are you asking from the investors? What is the next step that you would like them to see? It could be something as simple as more detailed discussions. You could be offering an investment with showing some type of equity position, but you want to be very conclusive of what you're asking for, what's the dollar amount.
Yeah, and that entirely depends on the pitch. Oftentimes, right out of the gate, people get too aggressive on the, we just want this money, whereas they should be having an offer. So there should be an amount of money they're seeking, but the real ask should be a more in-depth conversation.
Yeah, I agree, especially the first time out.
People come hot out of the gate and they think that it's a transactional relationship, and that's very off-putting for most investors.
For those who aspire to go higher in their entrepreneurial journey, we've got something just for you. Coming up next.
Are you ready to unlock your entrepreneurial potential? Introducing the Janus Entrepreneurial Report, your personalized roadmap to success. In just minutes, discover your unique strengths and areas for growth. Whether you're a seasoned business pro or just starting out, the Janus Entrepreneurial Report will help you identify and leverage your entrepreneurial tendencies. Don't wait, visit Prospirit.com and start your journey to success today.
Now, let's dive back into our journey of entrepreneurial insights.
The one thing I would add is make it look nice. And it's surprising. It's a statement that I'm shocked I have to make, but I have seen so many crappy looking presentations. And if you don't have the skills to make it look nice, pay somebody, recruit somebody, do something to make it look nice.
Absolutely critical. What's interesting to me with the pitch deck, one of the first things I always look at is the visuals in the pitch deck. So it's not just verbiage. Looking at data, and I did research a little bit specific data for this episode, visuals are 43% more persuasive than text. People retain 80% of what they see compared to only 20% of what they read. Visuals can be very captivating, and that's part of what you were talking about is in designing that, you want it to be persuasive unto itself.
Without a doubt, it needs to convey large swaths of information immediately.
You want to capture their attention and keep them engaged within this in the design of that. Now, what visuals to put in? I like to see infographics, charts and graphs, images, and you can also put in videos including a product demo, customer testimonials, or even your team's journey. So those are the types of visuals I like to see. But I will say with the charts and graphs, don't flood them with too much information. I see them with 10 different bits of information on one chart, and my eyes go blurry. I like to see 2 or 3 at max.
Right. They should be digestible immediately.
And just another simple component is make sure they're legible fonts. Don't get too fancy. Make sure they're easy to read and they are not too small.
With that visual, how is it going to be displayed? Are you sending this to the person so it's on a computer? The presentation is going to look one way. Are you projecting it onto a giant screen in front of an angel group? However it's formatted, you're probably going to have to tweak the way it looks. So just be conscious of how that's going to be displayed.
Keep it simple. Avoid clutter. Don't provide too much information. Less is more.
Without a doubt, in most things in life, I've found that less is more. This is truly a place where it applies.
I also like to use the appropriate colors. You don't want anything too garish and too bold, with some exceptions, I gather. But I like to use complementary colors with my branding to make it visually appealing.
So just make sure it's professional, I think, is what you're trying to get at.
Also avoid jargon. Don't use technical terms. Make sure the language is easy to understand.
Jargon is a big one. So jargon being industry-specific terminology. You often see that because the founding team, the people that are presenting, are deep in the weeds. They are living and thriving in this business, or they should be. That's the hope. Quite often the investor is familiar and maybe an expert, but isn't doing the same thing.
It's a huge mistake and it's a big turnoff. Basically, when you're looking at the visuals, they're there to enhance your message, to assist in telling a story and allowing that flow of your communication to the investors. It's a supporting document.
That's exactly right.
Before we wrap up, I wanted to talk about a few common mistakes and how to avoid them that I see. And there are 3 big ones. One is we've alluded to, it's overcomplication. It just is so confusing. It's too much information overload. And we've said it, but I will repeat it. Keep it simple. Another one is a lack of a clear value proposition. If you are not displaying what that value proposition is, you will not get the attention of the investors.
That's the point of the business. Why are you compelled to be here?
And then the last one I see is ignoring the competition totally. You're not in a void. I touch back on what I was talking about, saying there's a unique or superior component to your product versus existing opportunities within the marketplace or existing competitors. I see many people overlooking the competition.
They do that primarily out of fear. They don't want to highlight that there is competition. Whereas if you're showing that there is competition and you have a plan to beat that competition, turn it into a positive.
Very often, if I hear someone say, and I hear this very often say, we have no competition, I virtually will say this is the end of the presentation. Because if you have no competition, if no one else is in the market, it's probably not a market.
Right.
Any final thoughts before we wrap up, Ryan?
I hope that this was helpful to our listeners. I think it's a core part of starting a business, and I'm shocked that it's taken us this long to get to talking about it.
Yeah, and I would just say keep your pitch deck concise, visually appealing, and focus on the essentials.
Fantastic.
Well, let's get entrepreneurial.
Let's get entrepreneurial.
As we wrap up another episode of the Let's Get Entrepreneurial podcast, we extend our gratitude for your presence and attention. Your dedication to the entrepreneurial spirit fuels our passion for creating this podcast. Check out profspirit.com to discover resources and courses designed specifically for innovators like you. Stay on the cutting edge by following us on Spotify, Apple Podcast, YouTube, and other platforms as it is released. Until then, keep the entrepreneurial flame burning.